Welcome everyone to the first chapter of UAE corporate tax series. In first chapter, we are going to discuss certain basic terminologies and why UAE came up with the tax concepts and compliance concept and how the country is making regulations, and we'll make sure that we are touching upon certain other compliances which are applicable in UAE. Before starting the video, let me give you few advance notifications. First thing, please do not consider the lectures what we are discussing as a tax advisory. It is purely for educational purpose. If you have any particular questions where you required a sort of tax advisory or a tax opinion, you can reach out to me. Second thing, throughout the series, when I am discussing, I am going to refer certain article numbers, the cabinet decision numbers, ministerial decision numbers, FTA guides, public clarification, all these things I am going to discuss. You don't need to memorize the numbers when I am talking about articles or when I am talking about the decision numbers. But if you want to feel more confident while talking to your clients or talking to your colleagues, there is nothing wrong. You can remember the key decision numbers. That will give you more confidence when you are talking. Third thing, after the video, every video I'm going to put 3 questions in the comment box just to understand the level of understanding you had throughout the lecture. And please make sure that you are answering. There is nothing wrong, nothing to judge. Whatever you are understood, be it right or wrong, you can put it in the comment. And any corrections required, or of course I am also going to put at the end what is the right answer and why it is right answer. So let's start. First, let's start with why UAE came up with taxes. Like, if you know, before 2017, there were no taxes in UAE. 2017 is the year UAE brought excise tax, which is applicable for certain products. Before that, there were no taxes. First, why UAE came up with taxation? This is the question we are going to answer. Not only UAE, GCC countries were highly dependent on the oil money. And of course, the visionary leaders of UAE and other GCC countries, they decided that we need to move from the oil wealth to a knowledge-based economy. And UAE promoting a lot of tourism and other activities, construction, attracting investors into UAE. As part of this, UAE started shifting their focus from the income generated from oil and gas to different segments. This is one thing. Second thing, UAE want to match the country to international regulation level. Of course, when a country has no taxes, no compliances, there are other countries who are having these regulations. Those countries will be very hesitant to deal with countries who has less compliances or there is no taxes. If the country is a tax haven country, the foreign countries will be hesitant to deal with that country. There are many examples for that. This is the second reason. And UAE want to stop multinational entities coming into the country and just moving their profit from high tax country to low tax countries. This is a very common scenario that multinational entities are coming to a country where there is less taxes or no taxes and having their setup there and move their profit from high tax country to the country where there is less taxes. There are many other reasons as well, but at the end, UAE came up with corporate tax and many other taxes. Now the question is, why 9% tax in UAE? Before understanding why 9%, we need to discuss about a particular scenario or a particular organization which is called OECD. OECD is you can consider it as a community of countries. The full form of OECD is Organization of Economic Cooperation and Development. There are 140 plus countries are following OECD frameworks. Many concepts OECD brought, example the concept of transfer pricing, pillar 2, so many things are there which we will discuss all this aspect of OECD because UAE itself following OECD framework. Now OECD has a regulation that any country who is following OECD framework, they have to bring compliance, they have to bring taxation, and OECD is recommending a minimum tax at 9%. Any country who is following OECD framework, they have to bring a minimum tax of 9%. Now that is the reason UAE chose the lowest rate which OECD is recommending, 9%. Why 9%? Obviously the country want to attract more investors while having the compliances in place. So that's the primary thing UAE is focusing, and UAE chose the 9% taxes. 2018 is the year UAE become officially part of OECD. They started following the OECD framework, and there are other countries also. If you see, like I will give few example to you. A country like Hungary. Hungary is having a taxation of 9%, which is same like UAE. And a country like Bulgaria. Bulgaria is having 10% taxation. Qatar, which is a nearby GCC country. Qatar is having like 10% taxation right now on the foreign owned entities. And we have Cyprus 12.5%, and we have Ireland 12.5%. Now these are countries who are following OECD framework, and these are some of the countries who are following low tax rates comparing to other countries. If you see all these countries, UAE has gone for a lowest rate of taxes. Of course, Hungary is there, which is matching with the UAE tax rate. Now let's discuss on UAE compliance journey, where it is started and where we have reached at this point of time. Just to give a roadmap of entire compliance, 2017 is the year UAE came up with the excise tax. Excise tax is the first tax came in UAE, and it got implemented with effect from 1st October 2017. 1st October 2017. What is excise tax? Excise tax is applicable to certain goods which are harmful to the human being or to the nature. Now obviously they identified certain products. One is tobacco products. Second one is let's say energy drinks, and sweetened drinks, and they fix, like, if these products are consumed inside UAE, and the consumers are going to pay taxes. Tobacco products have 100% excise tax applicable. Energy drinks have 100% excise tax applicable. Sweetened drinks, in the year 2026, starting of 21st January 2026, the authority changed the regulation that the companies will pay the excise tax, or the consumers will pay the excise tax based on the sugar content in the products. Like if it is an artificial sweetener, or it can be added sugar, based on that there is a formula, and we need to work out how much will be the excise tax applicable for per liter of sweetened drinks. Now this is a glimpse of excise tax. Followed with that, 2018 UAE came up with value added tax. I have a very bad handwriting, hope you don't mind. And the date of implementation of value added tax was 1/1/2018. Now value added tax, many countries it's called GST or sales tax, different names are there. Ultimately it is like, based on the goods consumption or service consumption, the customers are paying the tax. UAE has a 5% value added tax for most of the goods and services supplied inside UAE. Now, any company or any business who are exporting any services, those are taxed at 0%. There are certain services which are considered as exempt from the UAE VAT, and even certain services or goods inside UAE, if you supplied, those are also falling under 0%. I'll give you a few examples. Educational industry, even though they are providing the service inside UAE, they are going to charge a 0% VAT. 99% purity gold, which is going to have a 0% VAT, and residential accommodation, first supply, they are going to have 0% VAT. So certain products and services, even if it is supplied within UAE also, it is going to be taxed at 0%. Now in 2018, one more regulation came, which is AML CFT regulations, which is anti-money laundering. That is the main thing. Of course, the counterfeiting of finance of terrorism, that is AML CFT. This regulation itself, as it is named, it is to stop inside the country the money laundering activities. That is the whole idea. UAE, when the law is introduced, of course the law is introduced on 30th October 2018, and when the law got introduced, the authority made a particular category, and that category is called DNFBP. What is DNFBP? Certain businesses, let me write it properly, DNFBP. DNFBP is a certain business activities which is designated non-financial business and profession. Certain businesses which are designated, and they have to strongly comply with the anti-money laundering regulations. They have initially, the authority classified 4 categories. One is real estate brokers. I'll tell you why all these 4 activities came into the AML regulation. Second one was jewelry and precious metal trading. And third one is corporate service provider. And finally, accounting and audit firm. Why these businesses are particularly under the AML regulation? First of all, these are the industries where customers can use for doing money laundering. Anyone who has illicit money or illegal money, the easy way of converting it into a legitimate way is buying real estate. And anyone who has bulk money, they can convert that money into jewelry or precious metal. And corporate service provider are the people who are generally helping to others to set up the companies. So people can come open fake companies, open bank account, transfer the funds to UAE. That's how the corporate service provider are in the scope. And who knows all these things? Ultimately, the entities or the service providers who are providing accounting and audit service. What is this for entities or 4 businesses obligation under AML CFT law? See, first of all, the government has no doubt on this business. Please don't take that way that the real estate industry government is highly monitoring because the brokers are doing something wrong. No. What the authority want, while you are dealing with your client, if you find that any of your client is using your business for money laundering purpose, inform to us. Just inform. Rest of the things we will take care. The same thing, if you feel like someone who is coming with a bag of cash to a jewelry and telling that I want to buy jewelry, there is something suspicious. The authority is telling that if you find something suspicious, report to us. This is the whole idea of AML regulations in UAE applicable for DNFBP. So these are the 4 categories. Now, next, it was in 2019, the authority came with a regulation called Economic Substance Regulation, which is ESR, and the law got introduced on 30th April 2019. By the way, the Economic Substance Regulation is already cancelled in UAE. When we are discussing more on corporate tax, I will explain to you why UAE cancelled Economic Substance Regulation. Economic Substance Regulation is nothing but the whole concept is that if someone is setting up a business in UAE, that should not be a shell company. This is a very simple layman explanation. Now, if that company want to prove that we are not a shell company, what they need to do? Of course, they need to economically present in the country. That is the whole idea. How they can prove that we are economically present in the country? They need to prove that they have adequate employees in the country. They need to have they have adequate assets in the country or capital expenditure. They are spending operating expenditure for the business inside UAE, and their decisions are taken, the major decisions are taken from UAE. All these things together we can call that this business is present in UAE. And every business have to prove it to the authority that yes, we are just not a shell company, we are having our adequate presence inside the country. That was the whole idea of Economic Substance Regulation, and this regulation got cancelled with effect from 1/1/2024, and the reason is that the law came when UAE had no corporate tax, and the law got abolished when UAE brought the taxation. Now UAE has taxes for business, then there is no point to prove that you are economically present or not. But yes, the concept of substance, what we are discussing here, the presence, it will come again when we are discussing more on corporate tax, especially when we discuss on the free zone matters. We will discuss it later. 2020 is the year UAE came up with the regulation called UBO, which is Ultimate Beneficial Ownership. And this regulation came on 24th August 2020. What is Ultimate Beneficial Ownership Regulation is dealing that any business anyone who is setting up a business in UAE, they have to that is ESR regulation. Any business who are setting up in UAE, they need to provide the details of ultimate beneficial owner. Who is the real owner of this company? I will give an example to you. Someone who is setting up a company in UAE, and in that company 100% shares are owned by a UK company. When we are seeing who is the owner of UK company, then we are finding there is a Australian company. Who is the owner of the Australian company? We are finding one Indian company. Who is the owner of the Indian company? We are seeing Mr. A. Now, for UAE company, who is the ultimate beneficial owner? Ultimate beneficial owner of UAE company is Mr. A. This has to be disclosed. Who is the real individual who is behind the business which is set up in UAE? This is the regulation, and it is still applicable. Anyone who want to set up a business in UAE, they have to disclose who is the ultimate beneficial owner. Not only to set up the business, if someone want to open a bank account, all these scenarios, they have to disclose that who is the ultimate beneficial owner of the company. 2023 is the year UAE introduced corporate tax. And corporate tax is implemented with effect from 1st June 2023. Now, throughout this series, we are going to talk about corporate tax. Just I am giving you the compliance roadmap. So, I will not discuss much about corporate tax because the entire series we are going to discuss on corporate tax only. 2025 is the year UAE implemented Pillar 2 regulations. What is Pillar 2? Of course, when we are talking Pillar 2, is there any Pillar 1? Yes, there is Pillar 1 also, Pillar 2 also. Let me take a step back and go back to the community of the countries which we discussed, which is OECD. OECD, as we discussed, it's a group of countries, 140 plus countries are following the OECD framework, and the concept of Pillar 1 and Pillar 2 came from the OECD. Now, pillar 1, which is not practically applicable in today's world, but I'll just tell you like what pillar 2 is dealing. Pillar 2 is dealing with very big giants of business, those who are making more than 20 billion euro annual revenue in a year. They are coming under the regulation of pillar 1. And as per pillar 1, each country, how to tax this business when they are operating in multiple countries, how each country should tax this thing, this is what pillar 1 is dealing. Since it is not in practice, let's not keep it aside. That is not the case when it comes to pillar 2. Pillar 2 is already a real concept, and even in UAE, pillar 2 regulations are applicable, and the pillar 2 regulations are applicable with effect from 1/1/2025. What pillar 2 is telling? Pillar 2 is telling that if you have a business in UAE, first you identify, is your business is considered as multinational entity or MNE? If the answer is yes, then you will come under the pillar 2 regulation, and instead of 9% corporate tax, which is applicable in UAE, such companies are going to pay 15% corporate tax. Now, the question is like, who is considered as MNE? Is every company is considered as MNE? The answer is no. To find out whether a company is a multinational entity or not, we need to see two conditions. First thing, operating in more than one country. If a company has a head office in Dubai and they have branches in Sharjah, Abu Dhabi or Ras Al Khaimah, that doesn't mean that company is falling under the definition of multinational entity. There should be a global structure. Example, the parent company is in UK and they have a subsidiary in UAE, they have a branch in India, they have like a joint venture in US. Then we can say like this company is operating in more than one country. Second condition, their global revenue or global turnover is more than 750 million euro in a year. If these two conditions are satisfied, then they considered as multinational entities. And multinational entities are going to pay 15% taxes in the country where they are operating. And UAE came up with a particular cabinet decision only for this, and the cabinet decision was published in the year 2024, and the cabinet decision number is 142 of 2024. 142 of 2024. Cabinet decision, what is cabinet decision? We are going to discuss in the next chapter. Just to give an idea, this is the cabinet decision published which is relating to the pillar 2 taxation. Now we are in the year 2026. 2026 is the year UAE has a big shift. That is, UAE is moving from paper invoice to e-invoice. What is e-invoice? Right now what is happening? A company, they are making the invoice and they are converting it into PDF or like image format, whatever. They are sharing it with the client and getting it paid. And at the year end, they are going to report their VAT or they are going to report the corporate tax, just the figures. Authority doesn't know what really happening in every business until they come for an audit. But once the e-invoicing is introduced, of course it is going to introduce with effect from 1/7/2026, and they made it like in two phases. Phase 1 for business who are making more than 50 million dirhams. Phase 2, it is for less than 50 million dirhams. It's an entire separate topic. Just to give an idea, in the current year in which we are sitting, 2026, UAE is taking this step to migrate to e-invoicing thing. Now, any business who are making invoice, it is going to be real-time reported to the tax authority. It's not like the authority doesn't know what is happening. Before your customer get your invoices, the authority is going to get a copy. And UAE is following a particular system called 5-corner model. It is very complicated. If you want to know more about e-invoicing, I have done a particular video only on e-invoicing. You can watch it in the same channel. Now, let me give you a bit understanding on taxes. Now, this is the entire roadmap from excise tax to e-invoicing from 2017 till 2026. Before getting into corporate tax things, first let's understand direct tax and indirect tax. What is direct tax? What is indirect tax? These are the two taxes applicable around the globe. If you want to classify the tax system divide into two, one will be direct tax and one will be indirect tax. If you see excise tax, VAT, these are the taxes coming under the definition of indirect tax. Direct tax is corporate tax, income tax. These are the taxes which are coming under the definition of direct tax. Now, what is the difference between direct tax and indirect tax? It's very simple. You think of a situation, by the way, UAE has no income tax at the moment. UAE told like personal incomes are not subject to taxes, which we will discuss. We have a separate video for personal income, why it is not taxed, what are all the incomes included in that. We will discuss that. Think of a situation, you are paying income tax. Now, you are paying the income tax or corporate tax out of the profit or income. Correct? If you are paying income tax or corporate tax, you are paying out of your pocket. Right? That means you are paying directly to the tax authority. That is why it's called direct tax. Whereas, if you are going to a shop, buying some products, you are paying 5% to the shopkeeper, not to the tax authority. Now, who is paying this to the tax authority? The shopkeeper is paying to the tax authority. If you are going to a shop, buying some energy drink, you are already, the price what you are paying, it's already including the excise tax. Being a taxpayer, you are not paying directly to the authority. That's why it's called indirect tax. That means you are paying the taxes but not directly to the tax authority. You are paying it through the service provider or the seller. Versus if it is a corporate tax or income tax, you are identifying how much profit you earn or how much income you earn, and you are calculating the taxes and you are directly paying to the tax authority. So this is the difference between direct tax and indirect tax. And most of you must be already aware that UAE has a corporate tax which is 9%, which is right, which is correct. I agree, 100% I agree. But if you see more in depth, you can understand that UAE tax rate is not 9%. I always prefer to say UAE tax rate is from 0% to 15%. We will discuss like who all are coming under the 0%, why it is between 0 to 50%. You will understand it. First of all, who is paying 0% taxes? Certain companies or certain businesses are still paying 0% taxes. Who all are paying 0% taxes? Business who are making profit below AED 375,000 dirhams, they are going to pay 0% tax. Second category, any company who make a revenue, not the profit, revenue below AED 3 million dirhams, they are going to pay no taxes, and the authority has come up with a relief for small business. It's called Small Business Relief. In short form, we call it SBR. This SBR, the Small Business Relief, is available till 2026 December 31. So 2024 or 2023 when the taxes came, 23, 24, 25, 26, 4 years we can practically say. These 4 years, if a company who makes below 3 million dirhams, the authority told you are not going to pay any taxes. This is the second category who are making, who are paying no taxes or 0% taxes. Now the third category of people who are paying 0% tax is free zone companies who are eligible for 0%. Certain free zone businesses are eligible for 0% taxes. We will have at least 5 chapters exclusively on free zone to understand what are all the conditions for a free zone company to get a 0% tax. There are a lot of things. I don't want to get into that. Just to get an understanding, our topic is like why UAE tax is not always 9%. Fourth category of business who are going to pay zero tax or no tax is called exempt person. So certain business or certain people are exempted from UAE corporate tax. They are not going to pay any taxes. Example, government controlled entities. There are certain business who are into extraction of natural resources. Why extraction of natural resources is not paying taxes in UAE? The reason is that they are already subject for a different taxation called emirate level taxation. That is why the authority excluded extraction business from UAE corporate tax. So in short, again, whatever we are discussing, we are going to discuss again. So if anything you are not getting, don't get don't think it is too complicated. Whatever we are discussing today, we are going to discuss very detailed. Exempt person are not going to pay any taxes in UAE. So this will give an idea that there are certain businesses who are going to pay zero tax or no tax. Now, who is going to pay 9%? 9% tax will be paid by the business who makes profit above 375,000 dirhams. Now, even if someone who is making 375,000 dirhams above profit, is there all profit is taxed? No. I'll give an example to you. Let's say there is a company who made 500,000 dirham profit. How their taxes will be? Their first 375,000 dirham tax will be, income will be taxed at 0%. And how much is the difference? 125,000 dirhams. This will be taxed at 9%. How much is 9% of 125,000 dirhams? It will be, let me calculate, is 11,250. 11,250 is the tax a business is going to pay who made 500,000 dirham profit. Now, if you see how much is the effective tax rate they are paying, which is 11,250 divided by 500,000 dirhams. So 11,250 dirhams they are paying taxes against 500,000 profit they have generated. And what is the actual percentage of taxes they are paying? They are paying 2.25%. Is it 9%? No. So the effective tax rate is below 9%. Any company, I am telling this to you very frankly, no company will pay exact 9%. Either it will be always below 9%, because why? There is always a 375,000 dirham which is taxed at 0% or not taxed. Now the third category of business who are going to pay 15% taxes. Who is going to pay 15% taxes? We already discussed. MNEs are going to pay 15% tax. Who we already discussed who is MNE, the multinational entities who are operating in more than one country and globally they are earning a revenue more than 750 million euro, then they are considered as M&E, and they will come under the 15% taxation. Now, do you agree that UAE has not always 9% taxes? That's why I told you it is always between 0 to 15%. You can genuinely have a question like, when you are telling 0 to 15%, will it be 15% for M&Es, or will it be 375,000 dirham anyway 0% tax, right? When it comes to Pillar 2 taxation, there is no 375,000 dirham threshold. 15% is the effective tax rate on all the profit. Of course, the profit is calculated in a different method. It's a very complicated thing, but effectively it will be 15%. So there is no 375,000 dirhams exemption available when it comes to Pillar 2 taxation. Let's see corporate tax journey. What was the roadmap of UAE corporate tax? First, January 2022, UAE authority announced that yes, corporate tax is going to be implemented in UAE. That was the first announcement. Followed with that, in April 2022, UAE authority published a document called public consultation. Now, it's a usual thing in UAE. Any particular law, when they introduce, they publish a document called public consultation, and the purpose of this public consultation is to get the opinion from public, that public and professionals, that this is what we are going to implement, what is your opinion? And people can comment, people can their opinion on that particular regulation, and the authorities, of course, they are going to consider the public opinion before they publish the relevant law. April 2022, the public consultation document, and public consultation document is not a law. Even today, I hear that free zone company who are getting income from outside UAE, they are going to pay 0% taxes. This is coming from public consultation. When the public consultation was done or published, it was written in the public consultation that the free zone company who are making income from outside UAE will be taxed at 0%, which got changed when the actual tax law came, which come up with a lot of conditions, stages, and all these things. December 2022 is the year corporate tax law published. December 2022, and exact date of publication is 9th December 2022, and corporate tax law got implemented from June 2023, which is 1st June 2023. So January 2022, the authority announced that the corporate tax law is coming. April 2022, the public consultation document published, and 9th December 2022, the tax law published, which got with effect from 1st June 2023. Now, I'll give you one interesting factor on the factor 9. What it is, like three interesting factors about number 9. First thing, UAE announced the corporate tax law on 9th December. And what is the tax rate? Not the effective tax rate announced by UAE, which is 9%. And one more thing, once like a financial year or tax year is ended, example, if a company's tax year is ending on 31st December 2025, when they should file the tax return, once the year is finished, the authority told you need to do the filings in 9 months. So there are 3 9 factors for easy to remember. The law got published on 9th December, 9% is the tax rate, and 9 months is the given time to submit the tax return and make the tax payment. Next, let's discuss like who all are the authorities involved in the corporate tax. There are mainly two authorities. First authority is called Ministry of Finance. We can call MOF, Ministry of Finance. Ministry of Finance is the authority who are lawmakers. They are making the law. They make the legislations. They make the decisions. They are the lawmakers. Now, another authority which is Federal Tax Authority, which we can call FTA, they are the law executors. So whatever the law announced or made by the Ministry of Finance, Federal Tax Authority is going to execute that law. So these are the two main authorities. We often discuss about Ministry of Finance, we often discuss about FTA during the entire session what we are going to have. Now just let me give you a quick summary what we have discussed. We are coming to an end of today's session. What we have discussed so far, we started with why UAE came up with taxation. We discussed UAE wanted to move from the oil money to different revenue generating streams like tourism, construction, and of course taxes. And UAE want to match the country's standard with in global standard, and UAE don't want a situation that foreign companies are shifting their profit to UAE. And UAE become part of an organization called Organization of Economic Cooperation and Development in the year 2018. The lowest rate which OECD is recommending is 9%. We discussed few countries who are having the lower tax rates comparing to the globe. Then we discussed a compliance roadmap in UAE. October 2017 is the year excise tax introduced applicable for certain products which are harmful. 2018 January 1st value added tax got introduced. 5% is the standard value added tax rate in UAE, which is applicable for most of the goods and services. And 2018 is the year anti-money laundering law came into the picture. The authority made certain particular category of business which is called designated non-financial business and profession, and it is real estate broker, jewelers and precious metal trading, corporate service provider, and accounting and audit firm. Why they are in this, and that we have already discussed. 2019 is the year economic substance regulation came, which got abolished with effect from 1st January 2024. The concept of economic substance regulation is that the business which are operating inside UAE should have adequate presence inside the country. 2020 ultimate beneficial ownership regulation came. Anyone who is setting up a business, they have to maintain a register of who is the ultimate beneficial owner, and they have to disclose to the authority if it is a corporate structure who is the real person behind the business. 2023 corporate tax got introduced with effect from 1st June 2023. 2025 Pillar 2 got implemented, Cabinet Decision number 142 of 2024, and it told that any business who are part of multinational entity, they have to pay minimum 15% corporate tax. And who is multinational entity? Those business who are operating in more than one country and having a global turnover of 750 million euros. In dirhams, it can be 3.15 billion AED, roughly. And 2026, in the current year, UAE is migrating to the E-invoicing, which we discussed what is E-invoicing. Further, we discuss what is the two type of taxes, direct tax and indirect tax. Why it is corporate tax is direct tax? Because the taxpayer is paying tax directly to the authority. Versus VAT and excise tax, taxpayer is the consumer, and the consumer is not paying directly to the authority, they are paying it through their supply chain. And we discussed UAE has the tax rate which is 9%, but it is not always 9%. We discussed it is between 0 to 15%. Who is getting 0%? Any business who is making profit below 375,000, and any business until 2026 who made annual revenue below 3 million dirhams, they are eligible for small business relief. And free zone companies, subject to the condition, they can get 0% taxes. And there are certain exempt person, which are, we discussed few examples, government controlled and extractive natural business. They are considered as exempt person. Again, going further, we discussed even if a company who is paying 9% taxes, they are not effectively paying 9% because always their first 375,000 dirham is taxed at 0%. We made a sample calculation with great difficulty. Now, we discussed further about the corporate tax law journey in UAE. Corporate tax announced in UAE in January 2022. The public consultation document announced in or published in April 2022. The tax law got published on 9th December 2022, which is with effect from 1st June 2023. We discussed a factor of 9, that the 9th December is the date the tax law got announced, and 9% is the tax rate, and the tax filing need to be done and the payment need to be done within 9 months after the tax year ended. We touched upon the authorities who are involved in the tax regulation, which is Ministry of Finance, who are the lawmakers, and Federal Tax Authority, who are the law executors. Now, we'll see in the next chapter what we are going to discuss in the next chapter. I'll just give an idea. We are going to discuss about corporate tax law, who make the law, what is the law is talking, and we are going to discuss cabinet decision, which we can short form call CD. We will discuss about ministerial decision, which we will call MD. Then FTA, public clarification. Then FTA guides. These are the primary documents available in the entire tax law. How these documents are connected each other, which order you need to read when you have some doubts. This is what, and what is the role of each authority, who is the cabinet, who is the minister, and what is FTA's role. This is what we are going to discuss on the next chapter. And as I told in the starting, I am going to post 3 questions in the comment box. Make sure that you are answering, and I will, of course, after certain time, I will come back and reply with the correct answer. I am sure most of you will answer correctly. See you in the next chapter. Till then, bye-bye.